Have we reached the limits of streaming price hikes that the consumer can stomach? For more on that, let's bring in Barton Crockett, senior media analyst at Rosenblatt Securities, and our own Alex Sherman. Welcome to both of you. Barton, first of all, do you expect any more Netflix price hikes? Because if anything, I've heard some angst that maybe the ad-free sub growth won't be as strong as hoped.
Well, look, I'm a little bit puzzled by the transition to paid sharing, which I thought was kind of provide more of a subscriber lift than we've seen in the June quarter, which was the first quarter. I think this September quarter tonight is going to be really interesting to see if it becomes more meaningful. They talked about 100 million people who are freeloading, and they're going to start clamping down. And our survey work would have suggested 40% of those eventually, one way or the other, would pay for it. But the sub growth we saw in the June quarter and the outlook for September quarter don't really jive with that. So, maybe that kicks in, or maybe not. Maybe what we're seeing is some price sensitivity. And I think that this could augur for maybe a different kind of moment for Netflix. They've been a go-go growth story, and we may be seeing some maturation of this market. And I think they're kind of raised rates. I think they're pushing, by raising rates, people more into the ad-based tiers. But I also think that there's a limit to how much you can do that in this environment with everyone raising rates, the consumer stretched, and the quality of the alternatives out there getting better and better.
Yeah, and you've got a neutral rating on the stock as a result. Alex, what would you add to that? Because it certainly seems, and the journal's figure is still that we're only paying about $30 a month across 4 services. So it's not exorbitant, but it's also not like people are entirely dropping the cable bundle either, especially as they strike more of these big combo deals. So it just feels like an add-on and not necessarily a replacement. Yeah,
over time, you'd have to imagine it will be a replacement, but we're still not there yet for tens of millions of Americans. The interesting thing we've seen, though, generically, if you ask the question, are prices going to go up? The answer is always yes.
Right.
Of course, they're going to keep going up. That's how companies make money, and these are publicly traded companies on Wall Street. But the interesting bifurcation we've seen, and it was sort of built in your introduction, is that while we've seen a 25% increase on the ad-free services, you're seeing almost all of these media companies trying to shift customers to the ad-supported services because they actually make more money on an average revenue per user basis.
I'm glad you said that, because I've been trying to figure it out. What do they really want? Do they want people to pay that higher $15 to $17 to $18 price point? Is that more lucrative for them? And your answer is no, it's more lucrative, as in the good old days, to be on that ad tier. That's interesting.
You might think that what they want is sort of a net neutral, right? Like, let's figure out the exact price points here where it kind of doesn't matter if they're getting ad-free or ad-supported. And what companies like Netflix have seen, I think, is that maybe there's more room, there's more of a delta between the ad-supported and the ad-free than perhaps they thought. I think Disney has also come to that conclusion. So what we'll likely see is the price keep going up and up on the ad-free services, but maybe these companies purposefully keep the price low in order to make the shift a little bit more not only palatable to consumers, because they kind of seem like the good guys there. Hey, look, we're not raising prices,
Totally.
just go over here. But also for advertisers, too, because as more consumers shift over to the ad-supported tier, the price for advertising can go up because there's more eyeballs there.
I'm just going to scream and rage, Barton, because, I like, obviously, the ad-free option. I understand the companies don't want that. And at some point, if the price point goes, and we're now just putting the genie back in the bottle. This is why people left, linear TV in the first place, was to go, hey, Netflix doesn't have ads. Well, it does now. Would you be happy if the streaming stocks had more people paying, or more people in general on the ad tiers going forward?
Well, I do think that there's more of an opportunity on advertising longer term, because I think that you can grow the ad revenues faster than you can grow subscription pricing to consumers, particularly in this environment. I do think, though, that the question of how many people want this form factor of entertainment-driven subscription streaming video is an open question. And what we're seeing from the non-Netflix services is a big push, for instance, into sports, which is something that Netflix is really only kind of dancing around.